Most people are in the pretrial phase of their case. There are people who have pled not guilty, and many of those people will want to assert their constitutional right to request a jury trial by their peers. Yet most people can't afford to pay the entire bond amount in cash. The bond system in Austin is complicated, and there are many options for people to get out of jail, along with pros and cons for each. But most people think they must pay a surety bond if they want to fight their case from the outside. Traditional surety bond services are for car and home insurance. If something were to happen like a flood or hurricane, then the catastrophic event happened that is covered under your policy, and the surety bond business will pay for the damages and to fix your car or your house. The surety bond business is the insurer and the first remedy. In contrast, the surety bond business is backwards. When a family member co-signs for the surety bond for Johnny, who is in jail, they're promising they will pay the entire bond amount if Johnny doesn't show up to court. And if Johnny actually doesn't show up and gets rearrested, then the bondsman can withdraw as their surety, citing the reason that Johnny failed to pay and meet his end of the bargain of the contract. Now, if Johnny doesn't show up to court, then the family member has to pay. The bond business will sue the family member in civil court for the surety bond amount. This will cause the family's credit score to suffer and is an incentive to pay back the bond agent. The bond agent is required to store money in a buildup fund in the event that something like this happens. If the family member is insolvent, then the bond agent has to pony up the money to the county. But the bondsman is the gatekeeper for who they let co-sign, and people are required to have collateral, good credit, or a good job to even qualify. Collateral is the most secure form of property protecting the financial liability of the bondsman. And the likelihood a bondsman will deplete their buildup fund is very low because they make huge profits off of everyone that goes to court. Most bond business owners drive nice cars and live in nice houses, so the business is pretty stable. Worst case scenario, if the bail bond agent loses their license and goes out of business, then and only then does the surety bond business backing the bondsman have to pay the county for the surety bond amount. This is a good business model to be the last one who has to pay.